One of the questions we get asked is, how am I going to know how much I'm going to owe in retirement on taxes, and how do I calculate that? So in delving into it, when you're working and you have W-2 income, you have income that's paid to you and they do withholding, and usually you find out at the end of the year. Hopefully you're doing tax planning in between, but if you're not, you find out if you have a refund or you owe money based on what they withheld. It's a little bit different in retirement, or it can be. Usually when individuals first retire, they may not have full distributions yet. And what I mean by that is you may not be in required minimum distribution. So many of our clients or individuals have a period of time from when they retire until they have to start taking money from their retirement accounts. Most individuals have a lot of money in pre-tax money, which means that will be taxable to them. But until then, the income may be variable. You may have income from things like stocks where you have dividends, interest, capital gains. You may have pension. The dividends and capital gains are taxed a little bit different. Then you may start taking Social Security. Only up to 85% of that is taxable. It honestly depends on your other income. So as you're stepping through retirement, there's going to be different periods of time where different income may be injected, if you will, or different starting periods. So it's important to understand how each of them are taxed. And so there's not going to be withholding necessary, although sometimes on pensions they do withholding, or if you have income from annuities, which we don't recommend annuities, but if you have income, they do that. You can withhold taxes from required minimum distributions or just from distributions alone. Some individuals retire with just retirement money and they have to start taking distributions. So wherever you're taking income from, most of it's going to be ordinary, depending on, so you have to understand the different income tax brackets, understand where you're taking money from and the taxation of that, because there could be a different way to do that. And then you would have to estimate that income either by yourself or with an accountant, or with your financial advisor. I'm a CPA as well, so I do look at taxes for clients just to kind of give them a rough estimate. And then you would need to make estimated tax payments throughout the year. If you don't pay in enough for taxes throughout the year equally, then the IRS may say, okay, you owe us money, but plus you owe us taxes and penalties. So I don't want you to have to pay penalties on your tax. You already owe the tax. So if you're making estimated tax payments throughout the year, that's typically what you have to do in retirement, is understand where your income's coming from and then estimate it throughout the year. So I definitely recommend, while you're getting ready to get closer to retirement, talking to an advisor, see your CPA, understand where you're going to be drawing from, understand that there's going to be potentially different taxations depending on when other income is interjected. And what I mean by that is that there could be some years where your capital gains are higher or lower. There could be years where you start different incomes like pension, Social Security, and then future required minimum distributions. And so at each of those time periods, it's variable what you will owe in taxes. So it's important each year to look at it and understand what you're going to owe so that you can pay in enough so that you're not penalized. If you have any questions, please feel free to reach out to us. We'd love to help.